Hello and welcome, students, clients, and new people. If you're tuning in live, let me know what state you are in. And those of you that are catching the recording, what you are watching is a series on how to find the right home equity line of credit in the second position. And what we've been doing is going state by state. So every time I go live over the next few weeks is going to be dedicated to each state in America and how we can go about finding the best banks with the best incentives that's properly set up for this particular strategy that I teach here on my YouTube channel, which is primarily how we can leverage a properly structured line of credit to accelerate any of your consumer debts, mortgage debt, even business debt, build cash flow, recover cash flow, save money on interest, shorten your debt-free timeline as much as humanly possible using math, using strategy, and using a rock-solid mindset foundation for you to then get to the next level in your finances, which may look something in the nature of building a business, maybe investing, maybe buying businesses, and ultimately setting yourself up for early retirement and being financially free. With that being said, we're just going to dive right into it. We are looking at the state of Georgia, how to find the right home equity line of credit in second position in the state of Georgia. What you will notice is some states will have more offers, more banks doing some really unique things over other states. In today's video, I will say Georgia was not competing as much. I was not, due to my research, and remember the research that I'm doing is in another state. So sometimes for those of you who are residents of Georgia, when you search for credit unions, banks that offer home equity lines of credits, you may have more options pop up that I may not see. So this does not give the full context, does not give the full story. What I'm simply doing is encouraging you to do the work, showing you how to do it, give you my framework, and then I'm actually going and doing it and seeing what I find. Based on what I find, I determine whether or not it makes it on the whiteboard due to my framework. From there, you're gonna leave with some pretty solid banks in each state. And whenever I find a little more difficulty, then what we do is look at nationwide banks, federal banks, or bigger banks. I like to start with local credit unions. You will typically find the best deals with those banks. And if we can't find anything in that particular state, then we expand a little bit. We go a little bit bigger, such as a nationwide bank or a bank that covers the East Coast or South, coast, North, right? A bank that covers 4 states, 5 states, and it just so happens there might be a bank or two that covers the state of Georgia. Typically, I should be able to find that because it broadens the search no matter where I'm located. So with that, we're going to take it to the whiteboard. On the left-hand side, we have our action items. These are the things that you need to have in place in advance before you choose a bank and before you apply at that bank that you chose. Just to let you know, we are currently at a prime interest rate of 7.25%. There was a quarter point reduction on September 18th. So by October 1st, all banks will go ahead and update their rates. So if you're somebody that already has a home equity line of credit and it's a variable rate, and you're out of the intro period or you're out of a fixed period and it's just variable, by October 1st or shortly after, your HELOC rate is going to go down about 0.25%. So that is a unique benefit as it pertains to velocity banking strategy when you're accelerating debt. Oftentimes when I'm illustrating case studies, I'm not showing the rate of our line of credit going down or up. I'm showing it staying the same. So there are seasons where rates go up, and then there's seasons where rates go down. If you're in a season where rates have been going down, which we are now in 2025, so if you're watching this video in 2029, 2028, it's probably a different story. But from 2024 to 2025, we've seen interest rates start to decline from an all-time high. We're seeing rates start to come down. So those of you that acquired debt years prior at very, very high interest rates, this strategy is a game changer for that crowd that is sitting on auto loans that are almost double digits, personal loans, 15+%, credit cards, 30+%. To be able to transfer that debt to an intro rate of as low as 0% with an average of around 3 to 6% and then level off at 7.25 or something less than 7.25 is a game changer. And then when you incorporate the strategy of being able to dump your income in, take expenses out, and you're affecting the average daily cost of what you owe, you're effectively reducing your rate from, say, 7.25 to a percentage cost in a year of somewhere around 3 or 4%. That's going to have a dramatic impact on your debt-free timeline. Now, what really solidifies all of it is coaching, accountability, partnership, support. Having a financial professional take a deep dive into your finances, see what's going on, map the whole thing out, and hold you accountable all the way through, you're unstoppable. Okay, let's dive into the action items. I want to see you at a credit score of 720 or higher. I want your DTI at about 30% or less. If it's above 45%, you're pretty much going to get the worst product when it comes to the home equity line of credit. It's worth waiting. It really is. It's not always smart to start this strategy right away. It's really wise for you to get the knowledge first, get the coaching and support, then implement. There's so many other things that we probably could have done before actually implementing this strategy. So if you're at a DTI of 40+% or higher, you're really not going to get the best product. LTV options, typically loan to value about 70 to 90%, with about 95 to 100% being the max with some banks. Closing costs, I love a HELOC that doesn't charge me any closing costs. Love that. No money to get in, no cost up front. That's even more savings on my debt. If I am going to pay a closing cost, there has to be some other incentive that would make me want to do that. For example, if I had an intro rate for 12 months at 1.99% or 4 or 5% with low closing costs around $500 with a prime minus 0.25%, I may jump on that if I can't find anything better. Okay, so intro rate, we got interest rate calculations, either going to be at a prime, prime minus, prime plus. Do your very best to avoid prime plus. Everything I put on the board, for the most part, is literally avoiding prime plus, unless I literally can't find anything. Okay, draw period, 10 years is the average. The lowest is 5 years. The longest is 20 years that I have seen. It's very important for you to build a relationship with the bank. What does that mean? Open up a checking account, open up a savings, move your paychecks over to that bank. Get set up in advance so that by the time you get the tool, you're able to hit the gas, you're able to run and just accelerate debt at a very fast rate. Mobile banking allows us to increase velocity. We want to make sure we're doing business with a brick and mortar bank. We typically do not, almost never want to do business with a non-bank institution that's all online, even though there's quote unquote mobile banking. If there's no checking account with that bank, you still have to have your income go somewhere. So you're going to be doing business with ABC Bank, but your HELOC is with XYZ Bank. So it's going to take you multiple days to move money in and out of the line of credit. And those are multiple days that you're paying interest that we could have avoided. So having the mobile banking function where you can have a linked checking account to your HELOC at the same bank increases velocity. Lastly is payment calculation. Needs to be revolving, principal and interest, or interest only is your two options when dealing with a home equity line of credit. How to choose between the two. If we are being offered an intro rate at a bank with a prime minus option for the principal and interest payment only, that's going to make me choose principal and interest. If there's no difference whatsoever between interest only HELOC or a principal and interest payment HELOC, then you're free to choose between the two. I still encourage my clients, people I work with, typically go with the principal and interest payment because it encourages you to actually pay the tool off, pay it down. With the interest only, it might encourage us to not pay the tool off, or maybe you forget. So always knowing that no matter what, principal and interest on the due date is always being applied is very, very helpful. Now keep in mind, when you're doing velocity, it really doesn't matter because your payment is always going to be paid in advance of the actual due date. So the only thing that really comes out on the due date is your interest, because you were depositing your paychecks automatically into the line of credit. So every time you transfer money in to the HELOC, that's 100% principal applied to the principal balance. That's considered a payment. So if you do that before the due date, you never have to worry about making a payment. So just keep that in mind. I found 1, 2, 3, 4, 5 banks: Credit Union of Georgia, Georgia United Credit Union, Peach State Federal Credit Union, Alliant Credit Union, and South State Bank. South State and Alliant are banks that cover more than one state. And then these are 3 credit unions that predominantly cover Georgia. And like I said, really tough. Georgia did not come to compete today via my research. So the options are pretty limited. Now, that doesn't mean there are less amount of banks that offer HELOCs. It just means there's not a whole lot of banks giving incentives attached to their HELOC. And that's what I'm looking for. I'm looking for incentives. I'm looking for additional benefits. I don't want a random home equity line of credit. I want the best. So if it makes it on the board, that means you're looking at the best stuff based on the research that I've done so far. So starting with Credit Union of Georgia, you can have a rate as low as 7% with 70% LTV. Now, if you're wondering, Denzel, why is there not much detail? Well, let's go to their website and I'll share with you why. So it's not always the case where banks share all their information. So here we have Credit Union of Georgia. That's their home equity loan product. We want to make sure we don't get confused. So you're going to scroll and scroll and scroll until you get to HELOC. So they have 1, 2, 3, 4, 5 different types of HELOCs. If you get the HELOC product that's 70% or less loan to value, then the rate could be as low as 7%. Everything else, very unattractive. Gotta have membership. That's important. And if we keep reading, right, evaluation of members' credit history. So I'm gonna take a swing and say 720 or higher. Their website's not updated. It's actually 7.25. And that's it. So we didn't get much more information from this particular bank. Sometimes I try to like click other things and see if it takes me to another screen or something. Made it here. Access to funds, interest only payments, okay. Tells us what we need to do. But could be some closing costs associated with this product. But that's about it. They really didn't give us much to go off of. Let's take a look at the next bank. We have Georgia United Credit Union. Credit lines max up to 500,000, 90% LTV. We like that. This was the most attractive thing on my radar. Home equity line of credit rate as low as 6.75, so that is prime minus 0.5%. Very attractive. 90% LTV, 500K max. This is mobile banking friendly. That's good. And if we keep reading, let's see what else we can find. Looks like you can lock your rate, but I don't really like to do that. And we read this paragraph down here, see what other information we can find. Based on individual credit worthiness, usually means 720 or higher DTI, below that 35%-ish threshold. Max rate is 15%. There's no intro rate period. 10-year draw. Minimum due for loan amount. Got some third-party fees, okay, so there will be some closing costs. Fees will be added to line at closing or can be paid up front. Not all products are available in all states, okay, but we know they're in Georgia. All right, because that's their main location. All right. So that's attractive. That's more attractive than Credit Union of Georgia. That's at a prime minus 0.25%. So I can be at prime minus 0.5 with a 90% LTV and a $500,000 max. Some closing costs associated. So back to my earlier point, I'm willing to pay closing costs if I can get a decent credit line amount, a prime minus, 10-year draw. So all these other factors, that makes me want to say yes to that particular bank. Here's the next one. We got Peach State Federal Credit Union. Was not able to pull too much info, but one thing that was pretty attractive, their second lien HELOC product, 80% LTV, says 6.25%. So that's prime minus 1%. Very rare to see banks that go that low. Now, there usually is a caveat to that. I think the reason why they are able to go that low, as you can see here in this little paragraph, they only do a max credit line of $150,000. So, am I okay with a $150,000 line of credit? In many cases, I'm not going to be upset. I can just do micro chunking with my velocity banking strategy and yield probably better results than someone with a bigger line of credit at a higher rate. Okay. Membership is required. I would have you do that anyways. A little $50 fee here. Looks like there is some closing costs, but honestly, more than willing to pay closing costs if you're going to give me that prime minus 1%, a whole percentage point is a game changer. So Peach State Federal Credit Union definitely made it to the board. Looks mobile banking friendly. I can't really complain. Next bank is LIEN. We've mentioned this bank in other videos where I covered other states. So LIEN is a bigger bank that covers multiple states. They just simply made it to the board because they were the first one I found that was given an intro rate. So they have 3.99 intro rate for 6 months, then it goes to 7.5%. So technically that's prime. 7.5% because they haven't updated their site yet. So that's technically prime. Not prime plus or prime minus, that's prime. No closing costs. Cool. $250,000 line of credit max. Cool. Not upset. Available in most states. So they cover a lot of states. So they're pretty competitive for a bigger bank. So this is a bank we've covered multiple times. I know they're mobile banking friendly. These are all the states that they cover, right? We're talking about Georgia right now. That's on the list. So we're cool with them. And I think in order to get the lowest rate, you do need to have a auto payment set up with them, which I have no problem with. Next bank, South State. South State doing something interesting. Closing costs covered. We like that. On top of that, we've got this promo rate, 6.59% for the first 12 months, 7.25% afterwards. So it's just prime. I'm liking that a lot. And let's see what other information. 85% LTV. Let's look for those paragraphs. Here we go. So there is an advance required, 10,000. That's not a big deal. Not too upset with that. We may pay some or all of your third-party fees. You must be in connection with opening a line of credit, collectively based on rate option, not available for promo. Okay, so if you get the promo rate, looks like they don't cover the third-party closing costs. They may cover the closing costs for their fees, the bank's fees. Might cover those. Now, this is a bigger bank as well. As you can see, they're covering multiple states. So if we keep reading, for credit lines greater than 250,000, it lowers the closing cost. So we're going to want to be under that $250,000 range to get the best deal, best rate, best offer. I'm more than willing to pay some costs if that means getting that 6.59 rate for 12 months and then cruising at just prime. I have no problem with that. Let's see what other says. So yeah, estimated closing costs, $339 to $6,000, which includes, not limited to, appraisal, flood determination, settlement fees. Additional fees may be applied. So I'm not upset about that. I'm not gonna flip out, especially if the initial draw they're telling me is 10 grand. That initial draw could take care of that closing cost as part of my chunk. So again, like I said, Georgia wasn't necessarily coming out here swinging, offering, good deals, good rates. Wasn't a whole lot of options. I was telling you, I was really pulling. So I found another bank This is a bigger bank called Bank OZK. They're doing a 5.49% for 12 months. I didn't put them on the board because it goes to 8% afterwards. So that's prime plus 0.75%. It's just not worth it for me. I would rather pay closing costs one time of a few $1,000 and be at prime and have a higher intro rate of an extra 1.1% higher, right? So South State Bank, we come back. This really helps you process when you're looking at these different options. You got 6.59 for 12 months. So that's 1.1% higher than 5.49, but you're at prime. The other bank puts you at as low as 8%. You could be at a higher prime. But say you're at as low as 8%, that 0.75% truly adds up in the thousands of dollars later on. Now, what would make you say yes to OZK over South State? If OZK covers all my closing costs and the amount of debt that I'm carrying, I'm able to pay off a vast majority of it within that 12-month period. Okay, maybe, but that's very short-term thinking. If there's other bigger debts that you have on the board or other things you're thinking about doing, you may find yourself liking South State a little bit more. All right. And then I just kept looking and searching. So I was putting some time behind it. Not gonna lie, I was putting some time behind it. It was a little bit tough, but let's take it back to the whiteboard. And now that we've found these 5 banks, let's start to process and discuss our top picks. Top picks. Again, a little bit tough. From a prime perspective of the interest rate calculation, Peach State Federal is at the top of my list. So for me, I'm perfectly fine avoiding an intro rate if you're going to have me at prime minus and the closing costs are not going to be as high because the max credit line is only 150 grand. So that's why I put Peach State if I'm a resident of Georgia. I put Peach State at the top. My number 2 pick, a little bit more of a balance. It kind of balances out everything. I was liking South State a lot. I know it has closing costs. $250,000 is the max. 85% LTV. Prime, 7.25%. But I'm out the gate at 6.59 for 12 months. So kind of like that. South State Bank. Number 3 is really contingent on what other additional data I could get from Credit Union of Georgia. Actually, you know what? I'm gonna switch something because I wasn't reading. I forgot. So that's not an intro rate. I don't know why I looked at that as an intro rate. So Georgia United would be my next pick because for me, on the values of benefits, I really like intro rates, but the prime minus thing, I'm very attracted to that. I'm very attracted to a prime minus rate option with my home equity line of credit. So Georgia United Credit Union is prime minus 0.5%. Peach State was prime minus 1%. Perfectly fine not having an intro rate, because prime minus 1% is like having an intro rate, but it's permanent for the life of the product. 6.59 for 12 months. Out the gate, I'm already less, 6.25. So that's even more savings. 6.59, 6.75, that little difference there, I stay at 6.75 versus over here, I jump to 7.25. And look how much higher that credit line amount is. It goes as high as 500K, 90% LTV, 10-year draw. Yes, there's closing costs. It's probably going to be more, but Georgia United is my second pick, then South State. But I honestly, once we've narrowed the banks down, you really just want to stick to your top two picks. Call them to verify the information that's on their website. Then you decide, okay, this is the bank I may want to work with. This is also very great if you are brand new to velocity banking. It might take you 6 months, 3 months, 9 months, a year, maybe even longer. It took me 2 years to fully understand the strategy. 2 years. And now I've been teaching it for 7. So if it takes you about a year, year and a half, 2 years to fully grasp this strategy, you could be priming yourself, getting your credit score where it needs to be, getting your DTI down by just making extra payments, snowball, debt avalanche, cash flow index, picking the right bank in advance, getting set up, moving your checking accounts over and your savings and your paychecks, and building that strong relationship, and just getting accustomed to banking with that bank. And with coaching, you're able to accelerate your education timeline because now you're working with an expert. And then within 3, 6, 9 months, we obtain the tool, and the offer is even better because right now you're in a declining interest rate environment. So when you're in a declining interest rate environment for this particular strategy, for the purpose of eliminating debt, that community, you are highly favored in that season. You're able to refinance, consolidate debts from higher interest rates to lower interest rates, and then keep plowing on your debts because now you have this increased amount of cash flow. Less money is going to interest. So for today, I hope that was valuable. We're going to keep going state by state. And in this time that we spend together, I am offering my lifetime coaching program. I have under 40 spots remaining. Some people have signed up recently, and I do have some verbal commitments, doing some emailing back and forth, figuring things out. But if you are present live, not catching the recording, you show up present live, ready to learn, engaged, this link is active during my live stream. Once I turn it off, wait a few more minutes, I will close it. And this is a $600 discount off of my lifetime coaching program if you pay in full, and we are able to work together on a one-to-one basis, have a session where we take it to the whiteboard, map your finances out, have multiple whiteboard sessions, phone calls, Zoom calls, whichever your preference is. And we are not just doing one strategy, velocity banking, although that may be one of the main things we start, but we're looking at cash flow hacking, maximizing your credit scores, investing, saving, protection, life insurance strategies, velocity, retirement planning, all of it. And it's a journey. It's not a 1-year program, 2-year program, 3-year It's a lifetime program. I'm willing to give my life's work to pour into not just you, but your family. And over the last 7 years, I've been working with clients that I've had for 7 years since I started this YouTube channel. And there are some families where I started with husband and wife. Now I'm working with their kids, or maybe I'm working with husband's brother or sister, and now I'm working with wife's brother, sister, or I'm working with mom or dad. And it just, so it goes up, it goes down. In terms of my program, the immediate family, we start securing everybody. Because once you get yourself in a very good financial position, you're able to think more abundantly, you're able to have more clarity. When you are a good steward of your money, you start to think more about others because you're good. You've created a environment for yourself financially, which you're no longer worrying about bills. So now you've got this brain capacity to think about your brother or sister, your mom and dad, your wife's mom and dad, your wife's brother or sister, your friends, your coworkers, your kids, even as they mature and start to leave the house and they're building their own lives. So maybe let's say you're a little bit older and you have older kids, and so you're not involved really in the finance. You have that relationship with your kids, but you're not involved in their finances really because they're building their own life. They got a career, they're married, kids, the whole nine. And if they're, figuring it out and you're in a place where you have the brain capacity to have conversations with them, and you've got someone like myself backing you up, supporting as a third party professional, I'm able to come in and mediate and have those difficult conversations, inspire them through your testimony, then they're going to want to step up. Because when your kids were maybe around my age, it's still in school maybe, or figuring things out, they weren't really paying attention to money. But then they had a kid, and then they got married, and now they have kids, and now they have debt and mortgage debt. And man, does it mature most people once they start getting into their mid to late 30s and 40s. It's so interesting how mature people become when they start carrying multiple 6 figures of debt. They're like, oh my God, got to get my life in order. And I'm like, yeah, that's what coaching's all about, personally developing yourself. You've never seen great athletes become great athletes without a coach, without a mentor. You've never seen it. It's never been done. There's never been an athlete that became successful without a coach. It's never been done. Like literally, no great athlete, and I'm talking great, not mediocre, not average, great. No great athlete in any sport in any history of time has ever become successful without coaching. Somebody to analyze how they're performing, give feedback and insight, because I'm able to see what they cannot see on the field. And so when it comes to coaching, working with you all, I'm able to see things you just can't because you're in your life. You can only see what you see. But then imagine being able to step out of your situation, out of your life. Imagine being able to step out of it completely and have a 360 view of how you're operating and emotionally detach from your situation. That's extremely hard for the vast majority of people to do, even myself. Like when it comes to my own finances, I have 1 or 2 people that I go to step out of my situation. I give them my full diagnostic of what I'm working on, and I'm able to have a professional look from a different point of view. give some insights, give some feedback. I would not be able to get that. So even a financial expert, no one is excused from coaching. Even if you're a coach, you're not excused from getting coached. So the moment you realize that and how powerful it is to have coaching in your life as it pertains to finance, 90% of your problems typically root from money. Typically. It gets masked by other things in your life, like trauma and relationships and problems in life and externals, things like that. But if you really peel back the layers, you can be like, oh, yeah, it's this money thing going on. If I can remove this problem, this obstacle, clarity opens up, alignment opens up. You're able to see your vision, able to see purpose, you're able to dream bigger, think bigger, operate abundantly, give abundantly. It's incredible. It is absolutely incredible. So again, being able to have somebody look outside of your situation, emotionally detached, because I'm not emotionally involved in your life. I'm a professional. I'm able to set my emotions aside. I'm able to set your emotions aside. And I'm able to just point out the greatest things about you. I'm able to draw from your potential, encourage you over this topic of money, elevate you. I meet you where you at, but then I elevate you to the next level. And you begin to take the action steps because now you have somebody watching you. Have you ever noticed that when you are speaking amongst friends, you talk a certain way? But if I put you in a room where there's a camera, immediately you're going to not have the same tone. You may not speak the same way. Why? Because there's a camera on you. The camera's recording. So your attitude, your perspective can switch quite fast. So imagine when it comes to your money, a lot of us do not have anybody looking at our money except for the IRS. And the IRS doesn't care whether you're winning or losing, they want their money. Imagine having a financial professional that wants to see you win. And now they see you effing up. They see you screwing up here. And we call you out on it. That hits harder than when you screw up alone. Nobody was there to watch. The camera wasn't rolling. So when you're screwing up, signing up for a timeshare that you really didn't want to buy, but you got sold into it, or signing up for this crypto company that promised you 50% returns and that was a scam, or signing up for this MLM and you borrowed from this credit card at 29% to invest 5,000 in this MLM to make 10,000 a month, and that's not working 1 year later. Nobody knows for the most part unless you told someone. But if nobody knows, you could be suffering all by yourself when it comes to your finances. And no one's going to know because nobody really cares to ask. No one's thinking, like, how often do you go to dinner with family and friends and the question is, hey, how's your finances? That's like asking, hey, how's your sex life? It's very similar. It's like, whoa, what are you asking me how my sex life is? Whoa, 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 whoa. You immediately become defensive. So when we talk about money, it's like, hey, how's your money doing? How's your finances? Oh, it's good. Oh yeah, we're good. We're good. Yeah. Things are good. You know, you put on a mask. You put on this fakeness, and you can lie and lie and lie and lie and lie. No one's really ever gonna know unless you royally screw up, which is like you file for bankruptcy, and then you have to move from that house that you were in. But even then, you can downplay it and say something like, oh, we're just, we're trying to downsize, we're just becoming more spiritual. We're tree huggers now. And we realize that we're not materialistic and we don't want things. So we're downsizing to an apartment. We're gonna be over here, da da da. Just, yeah, that's a bunch of BS for the most part. For a lot of people, they're BSing themselves, saying, oh, we're just trying to down. It's like, no, you're going through bankruptcy, you're maxed out on your credit cards, you got scammed over here, you're chasing rate of return, you're trying to make money over here in crypto, and you're trying to do real estate, and you joined this MLM, and you bought this coaching program online plus this course over here on mindset, and you got 20 books that you haven't read in the last 5, 10 years. So what are we doing is the real question. What are we doing when it comes to our finances? So I went down a huge rabbit hole there because I really felt like there was somebody here live that's approaching that environment. It's been creeping on you for years. And I want to say you're not alone. You're not alone. There's so many people where it's like debt just keeps creeping and creeping and creeping. It's slow. It's a slow suffering death when it comes to people's finances. It ultimately puts you in a surrender, yielded position of being and staying small, especially if you're from the minority community, Blacks and Hispanics particularly. And the reason why I say this is because if you look at statistics, Blacks and Hispanics are at the bottom of the list when it comes to wealth creation. We're at the bottom. The beautiful thing about being at the bottom in last place is you can't go no further down. So your potential is nowhere but north. You can only move up from last place. So if you're in last place right now in your life, guess what? You can't go no further lower. You're just going to stay in last. But what happens is if no one's encouraging you, if you're not doing the work, you're eventually going to succumb and yield to these facts or statistics and not have the courage to just run a little faster, to just read a little bit more, to get up 30 minutes before your alarm clock every morning, to spend an extra 30 minutes at work, to spend extra time delivering customer service, and to begin to build and build and build and build and build. If that is you, you're approaching that position in life, you're in last, you're not doing great, you need a revamp, this is the place. This is a non-judgmental, it's a judge-free zone on this YouTube channel. Judge-free zone, safe zone to ask real, hard, honest questions and improve your life for the better. Take the action, reach out to me, email me. I have links in the description below to join my community. You get invited to Q&A sessions where I can actually have a dialogue with you, unlike just a chat dialogue, but you can join my email newsletter and get invited to Q&As that I host for free all the time. I do workshops for free, I do Q&As for free. I'm just constantly giving at the highest level because I'm just operating at a different pace. And I want more and more people in this environment because it gets lonely. I'm not gonna lie to you. It gets lonely when you choose success because everybody else is choosing mediocrity. Everybody else is choosing average, below average. Everybody else is choosing less and scarcity mindset. I'm just trying to get away from as many of those people as possible and attract big thinkers, people who may be in the scarcity trap, know that they're in it and want a way out. That's the vast majority of people that watch this channel, that you know you're in the rat race. You know you're being trapped right now. You know you're being tricked. You know you're not getting the knowledge that you need and you want a way out. This channel is a way out. It's a way for you to learn not just the hows, but you find the who's in your life that can accelerate. With that being said, we'll close out here. God bless you. I look forward to seeing you tomorrow and we're going to cover the state of Maryland. Okay? So God bless you all. Tune in, reach out. Let's have some fun. Let's build the kingdom. Let's build your kingdom, and let's expand. Let's create freedom. Have a wonderful evening. God bless. Talk soon.